Hey guys, it is Julie here with TipRanks. Today we're taking a look at 3 big name companies that analysts believe have room for big growth. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Like I said, today we're taking a look at 3 well-known companies that analysts think have potential for big growth. These 3 stocks all have a strong buy consensus plus price targets with upsides of over 20%. So we're going to take a look at these companies, what it is that they do, and what analysts are predicting for their stock's future. Don't forget to make sure you've downloaded the TipRanks mobile app so you can follow along with some of the top ranked analysts on Wall Street and access all of your favorite research tools on the go. Links will be in the description down below. Now let's get right into these 3 strong buy big name stocks. We're going to kick things off with one of the most recognizable brands around the world with their golden arches. That is none other than McDonald's. Their stock trades under the ticker McD or MCD, currently priced at $273 per share. Their stock has seen growth of 13.4% in the last year and just up a couple percent in the last 6 months. They do score a 9 out of 10 on the TipRanks Smart Score, plus the stock also pays a dividend. It is a quarterly dividend of $1.52 for a dividend yield of 2.19%. Of course, McDonald's needs little to no introduction as one of the world's leading fast food chains. Famous for their Big Mac and crispy fries, they now have 38,000 locations and counting in more than 100 countries around the world. McDonald's feeds 68 million people every single day. McDonald's reported their Q2 earnings report back on July 27th, where they did come out with a solid earnings beat. For their Q2, they reported earnings per share of $3.17. That came in well ahead of the anticipated $2.78. The company did see their global comparable sales increase 11.7% for the quarter, and consolidated revenues increased 14%. Management noted that their second quarter results reflected their consistently strong execution of their Accelerating the Arches strategy. Their stock has picked up 24 current analyst ratings, coming in as a strong buy, based on 21 buys and 3 holds. The average price target is $334. That would be an upside potential of 22% from current prices. And down below, we can see several ratings coming in just the last couple of weeks, ranging from 13 to 40% upside. From a couple months ago, we do have a low-end price target, still with an upside of 15% with that hold here, and an overall high price target is still that 40% from 2 weeks ago. Our second strong buy stock is payment powerhouse Visa. Their stock trades under the ticker V, currently priced at $237 per year. They've seen some impressive growth this year, up 29.5%, and in the last 6 months, up about 6.5%. They score a 10 out of 10 on the TipRanks Smart Score and also pay a slight dividend here at 45 cents on a quarterly basis for a dividend yield of 0.74%. Visa is one of the top digital payment services around the world. Their cards are accepted virtually everywhere. As a world leader in digital payments, they're facilitating transactions between consumers, merchants, financial institutions, and government entities across more than 200 countries and territories. They have 4.2 billion cards worldwide, work with about 15,000 financial institutions, and see about 269.8 billion in total transactions. Their third quarter results came out on July 25th, and they did come out with an earnings beat, squeezing in a few cents ahead of expectations. For their third quarter, they reported earnings per share of $2.16, which beat estimates by 4 cents per share. They reported net revenues of $8.1 billion, which was an increase of 12%. Management noted that their consumer spending remained resilient, driving growth in payments volume and processed transactions, and that cross-border volume continued to be a tailwind, fueled by travel growth from the ongoing recovery and summer tourism. Their strong buy rating is based on 21 current analysts with 19 buys and 2 holds, with an average price target coming in at $284, which would be a growth potential of 20% for this next year. Down below, we can see a lot of recent ratings coming in the last couple of weeks here as well, in the mid-teens up to 23%. On the low end, we have a hold from 25 days ago with an upside of 7.5%, and actually our high-end price target does come from a hold from a couple months ago with an upside of 30%. And our third big name strong buy stock is in the tech sector with Broadcom. Their stock trades under the ticker AVGO, currently priced at $822 per share. Yes, that is pricey, but don't forget that fractional shares do exist. And the stock has seen massive growth this past year. They started off down around $430 and have seen growth of 78%, including this big jump up here, growing 29% in the last 6 months. They do score a 10 out of 10 on the TipRanks Smart Score. And once again, I didn't even mean to, but we're looking at all dividend stocks today. They pay a dividend of $4.60 per share on a quarterly basis for a dividend yield of 2.11%. Broadcom has relations with some of the biggest tech companies out there as a semiconductor producer. They're focused on technology leadership and category-leading semiconductor and infrastructure software solutions. They're a global leader in numerous product segments, serving the world's most successful companies. Actually, recently in the news this week, based on their agreement with Google. They shared their latest quarterly earnings report on August 31st, and on trend with our other stocks today, they also came out with an earnings beat. For their third quarter, they reported earnings per share of $10.54, coming in 11 cents ahead of analysts' expectations. Revenue came in at $8.87 billion, which was up 5% from the prior year. Management noted that their third quarter results were driven by demand for next-generation networking technologies as hyperscale customers scale out and network their AI clusters within data centers. Their fourth quarter outlook projects year-over-year growth, reflecting continued leadership in networking for generative AI. And their stock comes in as a strong buy with 18 current analyst ratings. That breaks down to 16 buys and 2 holds with an average price target of $981, which is just below 20% now. That's gone down since the stock is in the green today. So sorry, it was above 20% when I started filming. But you can see all of our recent price targets here are north of 20%, going as high as 27% upside, with some low-end targets coming from longer ago, from 22 days ago, with an upside of 9.5%. So there we have 3 big name companies that analysts believe there is room for more growth. Let me know your thoughts on these in the comments down below and some other big names that have been catching your eyes lately. I always love hearing from you guys. Please remember that these videos are never a suggestion to buy or sell any specific stock, just sharing what those analysts are up to and providing some information and entertainment. Make sure you're always sticking to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.